funding winter or a sharp crunch in seed capital for startups has been an issue for a while. Now the Karnataka government's mid-year fiscal report quantifies how bad the situation is yesterday in the state legislature. It records an 80% drop in seed capital for startups and a 46% drop in FDI investments into the state, largely driven by the global economic situation. The drop in FDI is directly related to drop in investments into the IT services and software sector, nearly 60% drop there. Nearly 40,000 jobs lost since the start of the funding crunch across the country, and that's a concern for the startup capital Bengaluru. Nationally, there's been a 70% dip in seed capital for startups, and this is a 5-year low in terms of inflows. Interestingly, while FDI and global funds are a concern for the startup industry, capex of top Indian companies is on an all-time high. 118 of the top 150 crossed the US dollar 80 billion mark in terms of capital expenditure. A special set of prominent industry voices and startup voices from Bengaluru with us this evening to understand those numbers, starting with Madan Padaki, entrepreneur and president of TIE Bengaluru. Madan, thanks so much for speaking to us. You're speaking to us from Belgaum. Help us make sense of the numbers. I mean, we all knew that there was a funding crunch or winter. Is it getting colder, or do you see a silver lining?
I definitely see a silver lining, and I think, the startup activity and the ecosystem is still very vibrant, thriving. I'm here in Belgavi today for a startup conference, and the number of startups in AI, cybersecurity, drones, solving some really, wonderful problems. There's so much of enthusiasm here. Yeah. Having said that, I also, of course, the numbers have dipped. There is much more realism and reality that's set in. Mm-hmm. But I don't see a dip in, it is getting, of course, harder to raise capital for at the seed stage and at the growth stage as well. But I don't see that being impactful on the startups in any which way, because the enthusiasm I see is still the same. And that's an interesting thing to note here, Virago.
As you make that point, Madan, the psychological impact of this downturn startup ecosystem is built, remember, on the risk-taking approach. As you know, there was a huge abundance of funds to take those risks and throw around till the crunch started, but that luxury is gone now.
Sure. I would look at it another way, that people and startups are being far more circumspect about their problem they're solving, the market fit that they're trying to get. Earlier, you could just go out to the PPT with some MVP and you could raise money. Now there are more harder questions being asked, which I think is good for the ecosystem, because then you're building something which is of value, right? So the conversations I've been having with startups here is, how do you generate revenues? What is profitability? Who are the paying customers? And that's taking precedence over where do I raise capital.
Right. Every downturn, has a lesson, right? What's it here? I mean, is it the over-dependence on foreign capital? Lesson there to reorient towards Indian money?
100%. I think that is the biggest takeaway from this situation that we are in. I think a large number of investors, Indian money has to step in as foreign money steps out. In fact, one of the objectives of today's meeting here in Belgavi was to encourage local angel investors to step in. And we announced a cluster seed fund of 25 crores along with the Karnataka Digital Economy Mission, of which 1/3 coming from the government, 1/3 coming from financial institutions, and 1/3 coming from local investors. Of the 1/3 from local investors, half of it has already got subscribed today. Right? So I think this gives us a lever to go to the smaller towns, to go to the emerging clusters and say, listen, there is an opportunity for the long term. Come in with your capital, help work with startups and build local thriving ecosystems. And I think that's the silver lining that we should build and make it bigger.
Thanks very much, Madan, for speaking to us, articulate as ever. But also with me this evening, a prominent name in the startup space with years of experience, Srikanth Iyer, co-founder and CEO of HomeLane, and also Neha Singh, CEO and co-founder of Traxen, who has some fascinating data insights. But Srikanth, first to you, Really, the impact of the crunch so far, do you see a turn around the corner, or do you still believe that it's time before we have some clarity on the road ahead?
Yeah, hi. Thanks for having me on the show. Great to be here. I feel that definitely the position is getting better. I can definitely see some checks being written. I also see an acceleration in seed investments and early stage investments compared to, say, 6 months ago. I also think it's not been a bad thing for startups because, unless you are forced to diet, you won't lose weight. I mean, right? So I think it's been a good period where many startups have had to look for opportunities. If you can't raise money, you have to look at consolidation. So one thing that we are not looking at is while the funding may have come down, the consolidation has increased, which means that you people are looking at other people, competitors, and seeing if there is a good time for them to merge or to get together or to even partner, forget merge. So those kind of transactions are going up, which I think is great because what one cannot achieve, maybe you can achieve it along with with your partner or competitor, even joining hands with them. So things that were not thought of maybe 2 years ago because of the excessive funding are clearly now coming to the forefront saying, hey, you know what, we should be looking at things like this. But I can definitely see a thaw in the freeze that was there for the last maybe year and a half.
That's interesting that you say that. I'm going to get you more on the job market, what it means for Bengaluru, which revolves around the startup economy, not just from a business point of view, more from a larger point of view. But before that, Neha, your data also tends to point out an uptick in terms of month-on-month investments, right?
That is correct. So the theme of the year was funding winter, and if you compare to all the stats which is there, this year was much lower than last year, nearly 70%, and obviously nearly 80% lower than the peak of 2021. So we are effectively back to 2015-16 levels. But there is, as people were saying earlier, there is silver lining, and there is uptake in the mood which is there. And so there were two things. If you were to just break it down, the funding winter was more pronounced on the late stage than on the early stage. So the early stage, is the deals are still getting done. In the late stage, one of the reasons was that there was a valuation mismatch which sort of existed, at which the companies were looking to raise money and the investors wanted to raise money. And as time passes, you also see that gap getting bridged, either because either the companies are growing into those valuations, or the companies are fine with taking a haircut. So as that happens, you'll also see acceleration in the late stage happen, along with the seed stage, which has already started to happen.
Right, interesting. Both of you seem to be very positive about it, but Shrikant, coming out of this, what's perhaps the big lesson? And I'm talking specifically from a layman point of view in a city like Bengaluru. Is it the dependence largely on a global economic ecosystem and not so much on Indian-owned money, or perhaps a broad basing? What would be a crucial lesson that one or the entire ecosystem needs to learn from what you've just sort of walked past?
To me, I think the biggest learning has been that irrespective of how the external conditions are, have a very good balance between growth and profitability goals. I think there have been times, thanks to all the cycles that we have witnessed, that sometimes you press the accelerator too much on growth and sometimes too much on profitability. Both are wrong, according to me. I think that's the biggest lesson for me. Always, press the foot on the accelerator, but keep an eye on the rearview mirror before you want to overtake too many cars, simply because it may not be the right thing to do to go too fast. I think that's really the big one. These are cycles. They have come before. It's not like this is the first time we're learning this. But we just tend to forget it after a period of time and then go back to old habits, which are not really really good for the ecosystem, so to speak. That's the real truth.
old habits die hard. Whether it's driving on the roads or running a startup, you need to be careful and following the rules. But Neha, really, in terms of the data that you've picked up, in terms of funding that's coming up, what's interesting is also that even if you take a state like Karnataka, the tax revenues seem to be increasing. The traditional sectors are doing okay. When you're talking of capital expenditure, we seem to be having enormous capital expenditure from Indian companies. What's perhaps the lesson that the data is throwing at us?
So that is correct. If you look at all the underlying, matrices, they look very positive, and that's why a lot of global investors are excited about India, both for the public stocks as well as on the private tech as well. And but there are these underlying things. For instance, so actually, even if you look at the funding winter which has happened in India, it is actually in line with what has also happened globally, right? Like even globally, you see a similar trend which is happening. Because of increased interest rate or a global slowdown, etc. And if you look at the Indian companies, a lot of them are focusing on the Indian consumer, but a lot of them are also global companies which are impacted by the fact that there's a slowdown in US or in Europe. But as things are sort of improving, there is the investor interest in the private startups in India continue to be very high, and that is why India is among the top 4 countries globally in terms of funding.
Right. Shrikant, you've seen many of this. I mean, you've been in the business for a long time. What would be perhaps a crucial aspect? One is in terms of job losses. One is seeing 40,000 in India so far, close to 40,000 job losses in India so far. On those lines, you've already pointed out that one should not be reckless as you go on and you start getting funds. But systemically, what can be done or designed to ensure that we remain, sort of in a sort of a protected space as we face the global headwinds?
I think the same thing that's true for startups at a smaller level is true for even people working in startups or even in companies, which is that you are expecting like 30-40% growth year on year in your compensation, then your role and your company's role is going to become less and less attractive to their customers. So in your own interest, I think you need to make sure that you are growing at a reasonable pace. Obviously, all of us deserve to be ambitious and should be, but you cannot, kind of shoot your own foot over there. So I think that kind of little bit of sanity needs to be there because, during the up cycles, what happens is salaries go up like 50% year on year at the very minimum. And then people's expectations just go rocket high and then stay there. They never come down. I think what is true for startups is also true for people working both in startups and whether it's in IT or wherever else. I think that needs to be tempered. It needs to. I'm not saying it needs to be frugal, but it at least needs to be reasonable and sustainable.
Right. Important point that you make there. As we close this conversation, Neha, from the data insights of the past and what we've seen, I know you touched upon it, but is there a projection we can make on where we could be when there would be a concrete, decisive turnaround, and when we could see the numbers that we have seen before?
Sure. So in terms of, the data, the good news is that if you speak to people, if you speak to investors, one of the things which is sort of consistent is that the bottom is behind us. So the worst is probably behind us and things seems to be improving from here. So I think that is one of the key messages that, you see from across investors because they are sitting on a lot of dry powder. They're also looking to sort of invest and they're looking at all these signs. So, good chances, consistent views that the bottom is behind us and hopefully things will improve from here.
Right. So when they will improve specifically, we'll still have to wait and see. None of us can forecast that. But thank you too for joining us. Remember, this is a lot of numbers, but it also as a spin-off has a huge impact on Bengaluru's economy per se, which depends on the huge vagaries of the startup world.